Hi everyone. Today I will be talking to Tobias Taupitz, CEO and co-founder of Laka. We'll be covering a few interesting points around business model innovation, leadership and culture, and expansion in new markets. So, good afternoon, Tobi. I'm so pleased to be with you this afternoon to talk about Laka.
Thanks for having me, Sabine.
So first, it would be great if you could introduce Laka, and I would love if you could also tell us how the proposition came about, because we used to talk a lot with one another, even before you joined the Startup Insurtech Accelerator with another name. And it would be great for you to talk to us about how you came up with this new name, Laka.
Very happy to. So Laka is first and foremost about business model innovation. And the story goes that I can conveniently blame my dad for all of this, who is an insurance broker home in Germany where I grew up. I went through the ranks in an apprenticeship with an insurance company, studied something dry as insurance business and actuarial sciences in Cologne. By no means an actuary, but an appreciation for the trade. Spent a bit of time with AXA as a student assistant, and also as an intern. And at some point then ran fast away from it as fast as I could, because insurance in Germany in the late 2000s was not the most agile place to be in. And I actually started my career in corporate finance. First a few years with KPMG, followed by Barclays here in London. And came over to the UK at the end of 2013. And at Barclays, I was in the investment bank covering fintech and insurance from an M&A perspective. And my job was on a daily basis to look into the funky new stuff that fintech was, peer-to-peer lending, robo-advice, all the good stuff. And the next day I would go back to an insurance transaction. And at some point, these two worlds would just come together and colluded. And there was a very simple line of questioning or thinking, really, that I played around in a spreadsheet and I paid out more in claims, meaning I increased the loss ratio in the spreadsheet and the profits came down for the insurer. And you felt like, hang on, if I do my job better, so to speak, paying out more, acting more in the customer's best interest, my profits come down. So there's this conflict of interest where you feel like I make more money by doing exactly the opposite what the customer wants us to do. At the same time, you see in the fintech world challenging status quo. You see the challenger banks, you see different payment solutions and platforms, lending, savings, you name it. And insurance seems to be the last stronghold that has been not really unchanged for centuries in the modern insurance world, at least. And think about the dynamics further. The question was very simple. Is the actuarial way of going about insurance, projecting future losses, the only way of doing it, or could it be a different way? In our case, that would be, can we not charge customers retroactively at the end of the month once we know how much has been paid out? And there's this fantastic TV ad from an energy provider where this lady is training for a marathon and she runs a marathon, just crosses the finish line, and then out of breath asks the judge about her time. And the judge goes like, oh, it's 3:58, and hang on, no, maybe it's 4:10. You know what? Let's split the difference, 4:03. And obviously the 4 hours mark is very important to a marathon runner. And it's a little bit similar with Laka in a sense. Why estimate when you can be accurate? I think it's their tagline, actually, not ours. Why should you project future losses when you can look backwards, knowing exactly how much you need to charge to recover your cost of claims? And we do so retroactively, and with that actually incurring credit risk or payment default risk rather than actuarial risk. So my biggest business risk is people running away without paying up rather than me estimating future claims. But that has some distinct advantages. So the first one we talked about, we can be accurate. We know down to the penny how much we need to recover in a month. We can be fully transparent because we are a high frequency, low margin play, essentially. So we don't have to hide any high profit margins. So customers get a monthly breakdown from us, what happened in a risk pool of like-minded people. And then we split the costs among them, essentially. And lastly, how we generate revenues is actually a cost plus business model in insurance. And by that, I mean, we add a fee on top of every claim we settle, a success fee almost. So ironically, the more claims we settle, the more money we make. That is basically three distinct characteristics of the Laka business model, which works very well in short tail risk, which is really high frequency, low severity claims in the non-life space to begin with.
Thank you. And where does this beautiful name Laka come from?
You alluded to our previous name, which was a working title when I was still at a bank. And you can see that I didn't have a lot of imagination at the time, buried deep down in spreadsheets. The previous name was Insure a Thing, which we still have a couple of old t-shirts, which is quite funny for us at least. But the name Laka is a fantasy name to a certain degree. Try to get a domain these days that is short, crisp, and not trademarked for any other reason. Don't try to look into Spring or Dawn or something like that. You wouldn't believe how many asset managers are out there. But Laka has really grown on us. Laka is the Hawaiian goddess of prosperity and hula dancing. And we thought about that as a very fitting comparison about well-being and having some fun.
Very nice. So you mentioned that you focus on business model innovation. So that was the core of your design. So why does the world need a credit-based insurance proposition today?
I think in very simple terms, because the current model is outdated, right? What worked 300 years ago made sense at the time. Imagine 20 years ago, you would insure your ship with me, and when I come to collect the premium retroactively, you would literally flee into the woods, right? There is no register, there's very little accountability. Nowadays, in a credit-based society, there's no reason why I need to charge you upfront other than sheer convenience. Of course, taking 12 months of premiums upfront is very, very nice. And I can invest the money and make some investment income off the float in between, and then pay customers at the end of the journey. But that really puts the customer at the short end of the stick. And with that, we have bad experiences in insurance. We have a phenomenon which I found horrendous, which is outsourcing the very reason for being claims handling to third-party administrators, not because they're necessarily doing the job much, much better, but because they have scale effects and are cheaper. Right? So you are paying someone for an intangible product, and in turn, the company is outsourcing that very service to someone else to do it cheaper. And insurance is all about claims handling. It's a bread and butter. So in our world, we would own the claims process front to end and make sure that the customers get an exceptional customer experience. So you asked a very simple question: why does the world need a credit-based insurance proposition? It's because we're reversing accountability. Currently, if I take your money first, I have very little incentive to provide the best possible experience out there. If I have to prove every single month that I am worthy of your premium retroactively after already providing a service, that gets us to a very different mindset. And I think that's what insurance needs in our minds, at least.
Interesting. So first customer, then a unique experience, which is based on service, and then transparency. So then you can drive that trust. So does this model work across lines of business? I know you're an expert in mobility. What about the other lines?
I think it's fair to say that we focused first on cycling and now have branched out to further forms of mobility. We are sitting on the green side of mobility, the green revolution, net zero emission and the like. So we started with the bike enthusiasts, branched out to different segments, mobility, e-mobility, commercial use cases we can talk about later. But in short, yes, there are a lot of other areas for applications, but you have to pick your fights, pick your poison, basically. We explored anything from mobile phones to home insurance to funeral plans to pet insurance. And we think we could do a fantastic job in all of these areas, anything high frequency, low severity, really. But at the end of the day, we would not be able to provide the best customer experience because we don't have distribution agreements or settlement agreements with Apple or construction builders or similar ventures. So I can only implore people to look into our model, take the best parts of it and apply it for different areas. No crutch held against, because I think the Laka model or whatever it will be called eventually, a credit-based insurance proposition should be the status quo across the industry for any short tail business, because it's the only way in my mind that it's fair and appealing to customers and changes the game.
Do you think that can work? Because, when you look at insurance and look at the insurers, all the insurers we know, they don't make that much of a profit from their motor book, right? It's usually claims ratios are very high. So I know you are turning the whole business model upside down, but can you actually do that profitably?
So look, there are obviously different lines of business, right? So motor is the classic door opener business. We used to have combined ratios, claims plus expenses of over 100%. So I would lose money with every customer that I make, save for any investment income. And if I have a motor customer, I would upsell them to the home insurance policy. And if I'm very lucky, I'll sell them a term life or even better, an annuity policy on top, and happy days. Now, there are other non-life lines of business that are highly profitable, right? So take personal accident, for example, take travel, where less than half of the premium is actually used to settle claims, where the rest is actually going into expenses, whether that's now acquisition costs, where you pay an airline generously for being the official insurer of them on the website of a captive audience to sell to, which is obviously driving volume quite nicely. But in a world where less than half of the money you spend actually going to the service you are paying for, there are a lot of pockets to look into to drive efficiencies. And yes, you could argue that we're going after the cherries about those products with low claims frequencies, because that means there's a lot of spillage elsewhere. So yes, maybe it's not the best place to start with motor insurance. Yes, the size is big enough. That makes sense. But there are a lot of product lines where very good money is earned in the conventional way. And in the Laka way, we still need to keep the lights on. So we're taking a fixed fee on top of every claim we settle. But we also have to be creative, because just with that, it's still a tough game and a scale game in the end of the day.
Yeah, and you have built a really beautiful brand, a lifestyle brand. I love the t-shirts. Got my husband to, bet for one. So you need a Laka t-shirt, darling husband. So we talk in our household and amongst our friends a lot about what you've done. So great job, Tobi. But so what differentiates Laka from the rest of the pack, actually?
No pun intended, huh? So there's two things, right? We talked about the business model at length, but there's a second element. You catch me on a bad day because I'm not wearing a very colorful Laka shirt, but we want to build a lifestyle brand in insurance, right? Which sounds quite bonkers outside in, but in a world where brand trust is at an all-time low and traditional insurers have commoditized themselves to the point of no return, thanks to price comparison websites, for example. The next big buzzword, of course, embedded insurance doesn't help creating brand awareness. It becomes more and more interchangeable. What we're trying to build is an insurance brand that people can trust, that they associate themselves with, and that allows us to do many more cool things, right? Where that's now horizontal cross-selling. We have what we call recovery and health product on the market as well, which is a modern twist and personal accident cover. But also, I think the big trick that many seem to be missing out in my mind is, and I'm hoping not giving away too many trade secrets here, but vertical expansion, right? So it's one thing to sell the motor insurance, the home insurance policy, but then moving on vertically, if you have a captive audience in the mobility space, why not help them buy the bike? Why not finance the bike? Why not do a lot more on these things when you have a captive customer base that trusts you and you serve well? So I think that's what we're heading up towards. We want to be known to be the green mobility guys across Europe and beyond. So we're already live in a European country with many more to come in the coming years. And that alone is a massive market. And needless to say that with the pandemic acting as a catalyst, a very fast growing market, citing all the e-bike growth forecasts for the next 10 years that get revised up every 3 months or so. It's mind blowing.
Yeah, we've seen that. The summer of last year, I could see a lot of acquaintances spending a lot of time in bike shop and getting bikes repaired. And so, and with the current change as well in London, with the new bike lanes. I guess all of us will be riding bikes to the office. So an amazing growing market, which I think will spike across countries as well. I've seen, like Lemonade, which has expanded from renter to pet, now I understand going to move into vehicle. You mentioned that you don't want to give too much trade secrets around, what else Laka will be doing, but I've just also noticed that you've moved in Central Europe. Can you tell us more about that move and how it's going?
So I think we had to move aside the notion that Laka is a high-end bike enthusiast brand and nothing else. Over the past few months and years with our rebrand last summer, we branched out into 3 different segments. We branched out to the mobility space, so that's the city cyclists, the commuters. We're expecting a big drive back to the office, in parts at least this summer. People will avoid using public transports, even more an argument for the bike, and by extension, e-bikes as well. There are a couple of interesting use cases, anything e-mobility that is really interesting for us. And what I am quite proud of, the team has made a big push, also going more B2B. So we have landed some fantastic partnerships in the commercial segment, and now working with delivery riders, for example, and manufacturers in that space. Much more to come on that, holding back a little bit, but it's mind-blowing what's going on in that space at the moment. And with that, we are a lot broader than we used to be. And we're not just doing it in the UK, but as mentioned, we have set up shop in the Netherlands. So we've obtained a license in Amsterdam on the ground, in a post-Brexit world, that allows us to passport into European territory, the single market. And with that, have partnered up with a fantastic partner on the ground, an N Group. And are really keen on branching out then across Europe, because the bet is truly that 125 million active cyclists with a high-end bike, or insurable bike at least, in a growing market is a fantastic place to be in. And if you focus sufficiently, you can own the full supply chain front to end. And I think that's what we're building, this defensible moat around mobility, sustainable mobility in Europe.
Nice. And so, looking at your existing expansion, geographical expansion, any advice you could give other founders around, the good and the bad, the challenges and opportunity of moving from your core markets to new markets in Europe? Because it's not the same, right? We are all different.
I think Laka is quite famously known for not playing by the rule book and kind of burning our fingers left, right, and center in the past. And rightfully so to a certain degree, because there are opportunities you need to look into, I suppose, but it's always a challenge to prioritize the right ones. Arguably, we were early in our international expansion, but I think for us, it was our way to prove that our addressable market is big enough. And what's really interesting is the Netherlands, obviously, is the mothership of cycling. 17 million Dutch people have 23 million bikes. Everyone literally is a potential customer there, which makes it quite exciting. I think from a pure project perspective, sadly, always add 3 to 6 months to your timelines, because there are always things that you're not in control of. That includes a pandemic, because yes, the regulatory process has taken longer than we hoped, partially because of that process. And insurance is a very tricky beast, because you cannot sell a single policy before you have regulatory approval. And with that, you cannot test and experiment enough. We've done a lot of customer research and interviews, but only when your proposition is live, you can actually test the market truly. So I cannot overemphasize the importance of trying to learn as much as you can about the market or the customer base. They will be different. You have to localize a lot. We are live now for 2 months in the market. And we just said, the first 2 months post-launch, let's try and get as many learnings to the door as possible. Brutally honest feedback that you can't gather what's your theoretical concept, right? Despite being live in the UK for 3.5 years, only when there's a credit card required, people will show you what they truly think. So add more time to it, add a lot of buffer to it. I think a historic mistake was always being the ever optimistic founder and thinking, yes, we're going to deliver in the same time frame and in the right cost space and the right budget, but always takes long. It always costs more money, but it's also hugely rewarding, right? If you're selling your first policy abroad, that's a big milestone, right? Or winning your first partner abroad, all of a sudden you're not a UK business anymore, you're a European business. And that is just from a mindset perspective, mind blowing, because anything is possible now. And now it's basically, do we go to Germany or do we go to France, right? Or whatever it might be. It's absolutely rewarding. It is really interesting when you have a team in a foreign country on the ground. So we have an office in Amsterdam, but there are also obviously challenges from a cultural perspective, right? Different mindsets, different people. And I think one thing that was really, really challenging was not building personal rapport or relationships. So the country director that we hired, I was lucky enough to at least meet him twice before we hired him, or after we hired him. His staff on the ground, I've never met in person, for example, and by extension, their counterparts in the UK never have. So I think that was probably the most challenging thing, building a diverse team across countries, but not being able to go for dinner together and building personal relationships. So we can't wait to make up for that very soon.
I mean, you are raising a very important point, which is diversity. Now it's DEI, diversity, inclusion, and equity. And I know you've worked with your co-founders for a very long time, Jens and Ben. What do you think make your team unique and different from a leadership and cultural viewpoint? Because you guys are getting on super well and you have built a really unique team. Can you give us some tips around building a high-performing team?
I would love to, in 5 years from now, if Laka is still around. I feel like we are still heavily experimenting and have to earn our reason for being every single day, and rightfully so, I suppose. But I think we are lucky in a sense that we are very diverse in a sense of knowledge. So we have a product person, a tech person, and maybe me as an operations person. And with that, we complement each other quite well. I think the more overlap you have, the more friction exists, and the longer you push talking about it out, the more heavily it will boil up or come to the surface later on, I suppose. So being very clear who has what role and what are the expectations basically clearly helped, and respecting each other's expertise and areas, so to speak. Beyond that, it is, I think, our open secret that we are in the cycling mobility space that allows us to recruit very targeted with people who have at least an appreciation for cycling. We don't have to wear Lycra every day to work or cycle in on your 3K road bike, but at least the green mobility movement should be dear to your heart. And with that, you have a common sense of understanding, and you can gather your team behind a specific purpose. And I think that's very, very powerful. We didn't appreciate enough in the early days, but rallying your team behind a common cause, I think, is very, very important. And that's obviously iterative. We have done so many iterations of that in the past, but I now feel very comfortable. And we are already, or just depending how you look at it, 4 years in, and we're still iterating on that front. So I think it's definitely an area to overinvest in, and yet it's the area that gets the least limelight, because every time you iterate on your mission, you don't win over new customers, and with that, the risk of you failing is higher, right? So it's a very tricky beast. If anyone who watches this has learnings, please do share them with me, because it's a daily exercise for me. But yeah, I think to a certain degree, a lot of stars have to align to get along with your co-founders. In our case, it has worked very, very well. But I think it's also about making clear who owns what, and making sure aspirations are the same, right? So if one person says, I want to sell this in 2 years' time, the other person says, I want to build a lasting company for generations, that might be challenging. So being very upfront, and don't assume hard questions can be solved down the line. They should be talked about from day one, at least basically as a starting point, and thinking always change. But that was what worked for us quite well.
I mean, the way you've put it is it's great, because you were fortunate to meet really two talented people, Jens and Ben, and I remember seeing you guys spending hours, nights building Laka. So I have these great memories, and I remember our walls in in Startup Bootcamp being filled with the wireframes around the design of your venture, of all these memories, which are great memories as well. But what you are saying is really fundamental, that purpose is key to building a right venture, and also that the people you're recruiting are aligned with your vision and have a liking as well for bikes. There's so many quotes I've read recently around purpose and direction. And one thing which seems to be common with the business like yours, but startups, scale-ups, grown-ups, unicorns, is that to be able to serve your customers, you need to have a team who actually relate and empathize with that customer and actually could put themselves in their shoes. And so it's fantastic to see that you've been able to do that too.
A very good example is our claims team are actually bike mechanics or former bike people, essentially. Everyone, you could have a lengthy discussion around very specific parts of the bike. I fully appreciate that, yeah, that's a really important element for us.
Yeah, fascinating. One thing which comes to mind is looking at the business you've built. Have you relied, and that is a big topic right now in the industry, but have you relied on building an ecosystem of partners to enable you to move faster? What's your view around startup ecosystems? And do you see them becoming a key enablers to see more ventures growing faster in our sector?
I think hardly anyone can move on their own, simply on their own. And if they do, I think that might be a mistake, because there's so much great help around and so many great people willing to lend a hand. Case in point, you helped us with Startup Bootcamp InsurTech in 2017. That was the first proof point for us that there could be something in there. Without the regulatory fintech sandbox with the FCA, Laka wouldn't exist. There are many great networks in the UK and beyond, many communities like Instech, London and similar. I've been fortunate enough to be part of a fellowship program run by a fintech investor called Anthemis. So still in the very early days, there were a lot of people who were willing to lend an ear or a hand and listen or help, actually. And I don't think that it's a weakness to ask for help. The very challenging part, though, and I admit that, if 10 people give you 10 different directions or different advice, then it's very difficult to filter as a first-time founder like I am, for example. So it took a while to figure out who to listen to and what to make out of the advice that I get. But nonetheless, over time, that becomes more and more of a natural process. So I think ecosystems are super, super important. That is why London for InsurTech naturally is such a great home to be. And I'm sure there are many, many other great hubs across Europe and globally. And again, to all the founders, you're not alone, right? There are great people out there willing to help. But it's for you to really express what you need and how you like working together. And be very radical in saying no to the advice that you feel doesn't fit in, because essentially you're the only person who knows the business. And outside-in advice is always challenging, but nonetheless, highly stimulating viewpoints are always great.
Yeah. So, as you know, I still want to spend some time coaching and mentoring startups. So that's why I work very closely with Sebastian in Cologne, on the program in Cologne. I work with Tobi on the program in Israel. It's just to make sure that, for sure, I'm aware of the new ventures coming through, but it's also about giving back. And I'm trying to make sure that I focus on an area I know, which is insurance and technology, where I can, and, understanding insurers, which is where I can bring hopefully a lot of value. But you're absolutely right. Advice is great. And it's very important for founders to pick the advice they feel is the most relevant. One thing I would say to the founders is it's always best, and even to the mentors I've mentored and taught to mentor, is it's better to ask questions and let the founder come up with their own answer rather than giving answers, because no one knows exactly where the world is directing, except if everything is evidence and fact-based. So a very fair point that one needs to be mindful that there will always be a reverse advice to one given. And so founders like you need to actually take advice as it comes, but also make their own decisions at the end.
I heard the other day of a quote that apparently Elon Musk made following the question, what word of encouragement would he give would-be entrepreneurs? And the response was brutal, but it has a very simple truth in it. As he was saying, if you need any encouragement, you shouldn't become an entrepreneur. And that is a really tough thing to say, but then again, there's a certain beauty and simplicity in there. And what I'm trying to say is that you walk into this with a lot of naivety, right? You think you're going to change the world, and no obstacle is too big to overcome. And I think if you don't have that attitude, I think it's a challenging task, right? So you walk into this thinking you can do anything, and you figure it out along the way, and it's really good fun as well. So sometimes, or as someone put it, it's good that I didn't know how steep or big the hill is I was about to climb.
Yeah, beautiful. Well, what would be the last few words you would want to leave with the founders, insurers, whoever wants to learn about Tobi and Laka?
I'm sure Laka is the more interesting topic. So do check us out. Laka.co is our domain. You can expect Laka to show up across Europe in the coming years, really trying to hone in on this mobility element that we really feel passionate about. Equally, please have a look if the model is for you. So again, short tail, risk, high frequency, low severity. I think a lot of beautiful applications for it. We just can't do it all. I think it's the nature of a startup to focus on certain niches. And I do believe that there are different areas where that could have a really big impact as well. And if anything comes out of this, is more choice to the consumer, and it's then up to them to pick and choose what they like. But yeah, I think there's a lot of interesting change. InsurTech has never been more exciting than it is now. Now we have especially also, we're losing more and more the shadows of fintech, becoming our own thing. And that means more PR, more talent, more funding enables all of that. So I think it's a really good time to be in InsurTech. Join the ride.
Yeah, great time to be in InsurTech. Join the ride, join the pack. Thank you very much, Tobi, for your time today. And looking forward to sharing your insight with our community.
Thank you.
If you like this podcast, subscribe now, share with your friends, and if you enjoyed it, please give it a 5-star review. Also, if you want to cover any specific subject with me, contact me on Instagram under Sabine VdL Officials or LinkedIn under Sabine VdL. Thank you.